as we all know, the second pillar, right? These are all my favorites, but this one always comes down to being my favorite because you said it already. The new is the lifeblood of any business. Not everyone believes that, right? But I don't think any of these private equity or public equity analysts who are investing in businesses that don't want to find new business and grow sales, right, through sales and marketing. So I believe it's the most important. So we call it in Dakota way parlance, know who to call on. And it really has to do with the TAM. Andrew, you want to just kick it off as because you already alluded to it, get more specific about really addressing, because really one thing we didn't address that we do in the meeting cadence is measuring our penetration rates against the channel. So can we just, because that's a very huge part of the TAM. Do you have full market coverage, especially with the, over time, the accounts that I'd say are limited, right? So banks, there's just so many banks that are opportunities in the database. We qualified them all. Broker dealers, right? Consultants. You can't quite go with the RAs just because there's 2,500. It's a little harder, but you can do the top ones. You just want to talk about the TAM, and then most importantly, measuring your penetration against the TAM, which is that's a second pillar of the Dakota way.
A good Dakota euphemism that we have is we sell apples to apple buyers, meaning we're not convincing people to buy an orange if they don't buy oranges.
To drill into that a little bit more, because I think that part of not being in a convincing business and getting a quick no and taking no for an answer when everyone's like, no, I'm going to convince you should be an active management. It's like they're on their index. Cap, right?
Correct. It's a losing battle. You're wasting time. You want to focus your time on the highest probability buyers, meaning are they an investor in your asset class through external managers? They hire third parties. If you know that fact, they're a candidate. So that's a big part of know who to call on. But at the same time, you can drill down to that further, saying, if we only have 2 years of track record and 100 million, it might make sense for us to spend time more on these channels while simultaneously covering where you have to be over time, the consultants, the large banks, broker dealers, but knowing that that's going to be a process
of identifying where we're going to have the highest probability of winning, right? You brought up a great point of I'm not going to try to convince you if you're an indexer that active management is the right approach. Now it's two sales. You created two sales. I got to convince you, number one, and win the sale that active is better than passive. And then if I'm successful, now I got to convince you that I'm the right active manager to play a role in those portfolios. That's two sales that you have to win.
It's very well said.
And one thing that we do, just sometimes when you do cold outreach, right, you just don't know, right? You can go to their website, you can go to their, if it's an RA, go to their ADV and try and figure out if they invest in your asset class, but sometimes you don't know. A lot of what we do, we'll touch on is city scheduling with a PM on the road. So I'll reach out and I'll say, hey, our large cap growth manager will be in town. Can you meet? And they say yes, right? But I have no clue if they invest in large cap growth, active or passive. What we do though in advance is just send the quick email and say, hey, we look forward to meeting you. Here are the materials. Given we've never spoken before, can I get 5 minutes of your time just to kind of set the table, what to expect in the meeting? That's where before the meeting, because I'll get to it, but that's where you can ask the questions of how do you invest in large cap growth? Do you use active managers? Are you only passive? Are you moving to active? Do you use mutual funds, separate accounts? Because the last thing you want to happen is go to the meeting with the portfolio manager. And at the end of the meeting, you ask the hard question, are you going to do a search in the next 9 to 12 months? And they say, we are 100% passive large cap growth. Like, okay. You don't want to, and having that pre-meeting call, that's where you can glean a lot of information. And that's a sales opportunity as well, where you can set the table in advance, should they be interested, and it's a fit.
Yeah, so let's get back to the pillar number 2, know who to call on, addressing your TAM. So we've always said product structure drives channel focus, right? So it's like almost back when you're in grade school and you have to take like, what does this look like? And take one thing and draw the line across, right? So if we're talking the scenario that you just mentioned, smaller firm, 2-year track record, right? Discretionary assets. So if you were to analyze the RA channel, so if you look at each channel by channel, there's product structures that they invest in, right? So mutual funds would probably be number 1, ETFs number 2, and RAs, separate accounts number 3, LPs 4, right? So you think to yourself, if I have an LP, that won't be the primary channel. However, if I have a mutual fund, regardless of the size of the track record, I have to go RA, it's discretionary. That's where I have to start, right? Simultaneously covering the models. However, if you're selling to a bank or a broker dealer, you probably will need a little longer track record, certain asset size, just for regulatory purposes. They do invest heavily out intervals, right? So there's more opportunity for that. So you guys just want to talk about how important you got to the convincing part, but even just establishing your TAM of where you're going to focus, because it's really, you talked about the most high probability of sales. You want to find the match for your product by channel, because the channels all have very similar buying behavior. And what I mean, investing behavior or investing in certain structures.
You're doing a fit analysis,
Right.
right? So that best fit analysis is going to help drive where should you be spending your time, a majority of your time.
Right.
Because ultimately then that we know that establishing that TAM, defining that TAM, setting the expectations, when you report back the penetration rate, you want to make sure you're reporting back where it is that you should be spending a majority of your time, but you have to define what that is. And that's where we get back to that best fit analysis and establishing what that TAM would look like.
So let's walk through now the details around, you've established your TAM, right, which is really, really important. And you're always trying to grow it and measure your penetration rate. Super critical. Now, do you want to talk about the magic field, which I love, and why that is so important for measuring the TAM, which, by the way, drives our entire, both businesses. Without that field, right, you're kind of just like this, you're guessing, right?
Yes. So we have within our CRM on the account page, meaning any allocator or pool capital, we have he calls it the golden field, right? It's the product that we are in the market with, or products, right? And the sales cycle against that product for that pool capital.
So drop-down menu. And it's the account sales cycles, which are in the program, but we can share as well. But it's either blank, which you don't want to have blanks, or lead, prospecting, long-term valuation, high level of interest, due diligence, red zone, finals, client, or past. Meaning they're not going to invest. Blanks are bad, especially if that's your TAM, right? Because that means you have not reached out. But the advantage is categorization. You can group and see where you've been and eliminate, right? Because if you just don't know a certain bank is not going to invest in large cap growth, why even have it in your brain? It just clutters everything, right?
So if you just want to, and that's a great thing about, back to your point about having a CRM, our product fit, we've defined it as we're mutual funds or smaller RA channel. So show me all the RAs, 200 million and above, whatever it might be, that I will be calling on for our product. And where do we stand against our product? So that golden field, the sales cycle field, day one, right, it's going to be full gray field. But over time, as you reach out, right, you send the email or the call, you move them into prospect, meaning I'm prospecting them. Or if you get feedback, you know what, this is interesting, too small or too short a track record, move that into long-term evaluation, create an opportunity, track those notes. So then when you do hit the 3-year number, the 500 million, whatever it is, you know, follow up. And then you keep tracking those sales cycles and the movement of those sales cycles, so you can see how you're doing against the TAM.
And Dan, talk about, so that's, I mean, even before you start executing at your TAM, you want to be able to have a process by which you can track your execution against your TAM. That also creates massive sales triggers.
Right. And focus.
Yeah, focus.
Right. You take all the guessing out of your day. You wake up in the morning, you get into the office, you now have focus of what your priorities are for a day. Steve talked about it. We establish those on a weekly basis. We talk about where are we focusing. And the majority of the time, it's how can I increase that penetration rate relative to the TAM that I've established? Where do I need to be spending my time? Taking the guessing work right out of it.
And I think also to Dan's point earlier, you get out of the assumption game, right? Because you think you might know a pool of capital and you've been in there a year or 2 years prior and you're like, they're never going to invest in this new product or they're never going to invest in our strategy. But you have no clue what they're currently talking about in their committee meeting, right? But if you have it in lead or prospecting in that sales cycle field, we as a team, we have to have an answer for it. That is our job. So I need to reach out. I need to get that meeting. I need to get an answer for it. And no is totally fine. Right. Not knowing is not fine.
Yeah, totally. So can now establish the ability to measure progress against the TAM, right? Through walks, like, let's talk about, again, these are some of my favorite things, is how we execute to get that. You want to talk about city scheduling?
Yeah.
Which is the cornerstone of our foundation of our sales process.
Yeah. So back to our daily check-ins, right? That's something that creates sales triggers. The other thing that would create sales triggers is putting cities on a schedule and reaching out to schedule for those cities.
Yeah.
And we all know the top accounts that invest in certain asset classes. Those are going to be a lot of the cities that you go to. And it's always great to be able to be in front of those buyers all the time. But it also creates an opportunity with city scheduling, as you're scheduling for 5 cities at one time, to go to who are the accounts that we're prospecting that we don't have answers for, that I can run a quick report, to your point of tracking stuff.
Right.
Quick report, we're going to Cincinnati. Here are 25 pools of capital. I don't have an answer for our small cap growth manager. Go.
And it's that cold outreach.
It's that cold outreach.
And
But
focus.
hey, I'm going to be in town. Not, hey, can you do a Zoom call?
Right.
Because we know that everybody's getting hit with those messages all the time. And once you get that meeting, Tim's point, we celebrate the new.
Yeah.
And then we're in front of a new pool of capital. And that's really how I believe we've been able to grow new relationships over time, is through city scheduling.
So Tim, talk about like the why behind city scheduling, why that's so important.
So we chunk up our entire database of accounts by metro area, meaning if you're going to fly into Chicago, who are the accounts and contacts that's in Chicago that I could potentially go meet? City scheduling in the metro areas is effectively a data organizational mechanism, right? Chunk up these pool of capital into bite-sized pieces that I can just focus on this week, right?
It takes a huge universe down
And narrows it down to the 72 RAs that are in Chicago. That we can cover in 2 days, right? Just from, hey, Tim Dolan, I work with Dakota. We have a great large cap growth manager. I'm going to be in town with the PM. Here's what they do. Can you meet at 11 a.m. on September 7th, right? And then clear call to action, which we'll get into the email and subject line. But that clear call to action, right? And then the following up. Then if you don't get the meeting, that's fine. But
they're seeing your brand every single time.
Exactly. And then more importantly is, right, you get the 5 meetings, the 9, 11, the 1, the 3, and 4:30 p.m. and how you chunk it out. But that's 5 meetings.
Yeah.
You reached out to 72 other pools of capital
Who saw your brand.
who saw your brand. The important component is doing it again, right, in 2.5 to 3 months.
Yeah, well, you just brought up this most important part of this whole, with any sales process, it's the consistent application of the process.
Yeah. Just because you reach out to a pool of capital that does not get back to you today, right, they will respond. And they might say, take me off your list. That's totally fine. I always like asking why, because they already said no, right? If they don't answer, you're in the same spot. You just say, why not? We're passive large growth. Okay, now I know. Not a fit, right? So the city scheduling it's that account coverage. It's the data organization and making a huge universe significantly smaller. And the great part is you don't have to go, right? If you only get 2 or 3 meetings, the process forced you to cover all 72 RAs in Chicago. And if you only have 2 meetings, you can easily flip them to a Zoom or a conference call.
Yeah.
Which people are comfortable doing.
But if you have 2 or 3 meetings, you're trying to get to 5.
Exactly.
You're very focused in those last couple of days, reaching out to the new.
Right.
Right. You're really focused on, I need to get the 3rd, 4th, 5th meeting.
It had to be a game, right?
And
It's a game.
And if you are just saying, hey, I'm going to reach out to Chicago, and those are Zoom meetings, there's no pressure on you to reach out to the new. Oh, I've got 3 Zoom meetings next week.
And the Dakota way gamifies sales. That's the whole point of city scheduling. You're turning into a game. It's the fiddle 9, 11, 1, 3, and 4:30. And then 3 weeks out, you start that process. What you're getting at is day before, maybe even day of, you can reach out and say, hey, I'm going to be in your building right next door. And then you're just trying to fill your advance card, right? I mean, that's the goal.
And a big component of what we have in our database and marketplace is now with remote work is contacts whose home office is somewhere else.
Yeah, which is really nice.
Right. So let's just take it as an example. Marquette Associates, consultant based in Chicago. They have offices in St. Louis and Philadelphia and Washington, D.C. There's nothing worse than getting out of an elevator bank and seeing Marquette. You're like, wow, they're a client. Why am I not meeting with them? Right?
They're in your back.
So you're in the building, like they're right there. So we track every contact and where they actually sit, right? So when you go into the metro of Chicago, it's not only just a standard pool of accounts that you know that are there, but it's the contacts that you might not be aware of that you can get a meeting with as well.
Yeah.
It's also risk control. The city scheduling is staying on top of what's going on in that city. So, if I think back to 18 months or 2 years ago, going to Atlanta, and you called me 2 years ago, and I said, yeah, these are the terms you need to call. If you talk to me today, it would be very different than what I said 2 years ago. And so if you're not constantly going there and staying on top of it, like, you can get behind very fast. Stale data, people move around. So it's also that risk control, just keeping yourself aware of the movement that's going on, new firms being created, mergers that's going on in that city.
Right. And so city scheduling gives a salesperson purpose every single time they start their day. Because you're scheduling, we always like to have 5 on the city at any given time, right? And we always schedule for 9, 11, 1, 3, and 4:30. So you have 25 meeting slots. Let's just talk briefly about the fun of actually sometimes city scheduling for 2 different cities on the same day and seeing, right? So now you have 10 on the same day. And then if you end up having luck in one city versus the other, because maybe Mondays and Fridays, people are in the office more so than Tuesday, Wednesday, Thursday. And the fun of doing that, or even sometimes 3, right? And then you see what ends up having the greatest hit, and then you'll go to that city, right? And so there's meaning if you gamify it to this level, right, it can turn all that rejection into fun because you're sending out more emails, you're actually doing the outreach, right?
Yeah, I'm still celebrate getting that meeting.
Oh, 100%.
Tangent point earlier, right? You got to celebrate the process.
Yeah.
And that's the fun of this business.
Right. And just to close out this module number 2, which is know who to call on, emails. Okay. The proper way to send an email. I'll do the subject line, then one of them somebody do the body, and then someone can do the CTA. So it's obviously we do this 100% of the time, and it's religion for us. So subject line always has to be meeting request, date and time. Body email
Needs to be very to the point. Needs to be short. It needs to be direct.
and compelling for why someone
Would want to take a meeting.
Yeah. So because the brain goes, do you guys ever get emails that say meeting request?
I do read them.
Yeah, I do read this, but my point was most of the junk I get, I don't read because there's no.
Yeah, there's no clarity.
Okay.
Why are you emailing me? But they say media request. I'm always like, what do you want to meet about? So it has to be compelling and interesting where they can get
Ask you to
who you are, what you do very, very
Very quick.
quickly, and why it's compelling. The last part, the bottom of the email.
Can you meet on this day at this time?
Correct.
call to action.
Clear call to action. Very super, super important.
Yeah, very specific. We see a lot of times, let me know if you have time next week, or
Yeah.
I'll be in town mid-September, would love to get together if it works, right? Like, that's a long month.
Yeah.
Right? Can you meet on September 7th at 10 a.m.?
And the one big mistake too is that Dan touched on keeping it very direct, but salespeople try to make the sale in the email. And people just don't have time for it. That's the reality. So you need to just quickly figure out, how do I establish credibility? Why should you care? And why might I be differentiated or different? And then can you meet at XYZ?
And then just be careful of the attachment, right? Because the attachment, a lot of times that attachment goes into the spam folder. Right? Yep.